Hello there, it is full year results time here at XP Power. I'm joined by Gavin Griggs, CEO, and Oskar Zahn, the money man, the CFO. Gavin, this morning when we came in, lots going on. I could just sense it. So, we're coming through COVID. What really are the highlights for XP over the last year?
Yeah, so we had a very pleasing performance in 2021 against quite a difficult backdrop. But the key highlights, strong order growth up 43% year on year and revenue growth up 10%. And that, against a challenging backdrop. But we continue to make progress. We completed 2 acquisitions in January in southern Germany, F&G and Guth, based in Munich and Stuttgart. And they're both high voltage businesses, so expanding our presence in the high voltage market.
So that's all the good news. I'm not necessarily wanting bad news, but let's call it challenges. You've been facing some significant challenges. Last time when we were in this hot seat, we were talking about logistics, we were talking about components, and of course we've been seeing price rises.
Yeah, as I said, it's been a challenging backdrop 2021. And the points you raise, let me take them in turn. So component shortages, yes, everyone's seen that, and it has impacted us. First half of 2021, we coped quite well. We had a good level of safety stocks. In the second half, things got more polarised on key issues. It was almost like playing whack-a-mole with some of these components. And it continues to be a tight supply in the market. We expect that to ease through 2022, but it will definitely impact the first half. The second one we talked about was COVID. It's been impacting. You've had ongoing higher absenteeism from following Omicron, but the big impact for us was in Vietnam. In 2020, they avoided COVID completely. In 2021, in the second half, they had a national lockdown. And essentially, to keep operating, we had to seal our site. So we had about 50% of our workforce living on site and producing power supplies for our critical customers. We did manage to flex some of the production to China, but inevitably it was a very difficult period, and we are very grateful for the efforts they put in. The other well-documented area is logistics. We do a balance of both air and sea freight. We clearly prefer sea freight. It's cheaper and more environmentally friendly, but the lead times are significantly longer. Because of the challenges with Vietnam production, we had to move more product onto air freight, particularly in Q4. It's a temporary issue. We'll go back to sea freight, but it did hit our performance in the second half.
Okay, well, we'll be talking more about the markets and the sectors in a moment. Oskar, how did that translate into financial performance from your perspective?
Well, you've just heard some of the challenges, but despite all that, we believe we've delivered a robust performance in the year. You've seen the orders are up 43%, which is an extraordinary amount of money, 343 million now, compared to last year where it was 258 million. And it's driven, yes, by semi-fab. A lot of it's coming from that sector, but we've also seen a recovery in industrial and healthcare getting back to sort of normal demand after the COVID-related issues, or revenue driven last year. What's driving the semi-fab growth is really anything to do with electronics, so smartphones, servers, PCs. In a nutshell, great performance, strong cash performance.
Let's drill down into the markets, Gavin. You're quite diverse on the markets, and what are the trends that you're going to be facing?
So we're seeing some megatrends that are really starting to impact us. The proliferation of electronic devices, so everything isn't going electronic, drives demand. The other key point is the under-provision of healthcare globally. So what we've seen post-COVID is many of our customers or customers are investing in both infrastructure to support the just global healthcare demands, but also as the treatment of COVID has come off, we're seeing much more back onto innovation. Robotic surgery tools, a lot of innovation in the operating theatre. It's quite exciting stuff, and it's all of that innovation is exactly where we work best. We like to work with the innovative customers. Other things that are happening, resilience of supply chains, having the ability to use both Vietnam and China has been a great advantage, and we can demonstrate our resilience. And then the other factor is ESG credentials are coming more and more a part of the norm, and customers are more and more demanding of that.
I'm going to get a bit more detail from you on ESG because it is so important. It's such an important pillar of what you do. But I'm quite keen to let Oskar back in with his for the purists, financial highlights and also sector revenue performance, if you can, Oskar.
Of course. We briefly touched on the reported orders, which are up 43%, but revenue was up 10% on a constant currency basis, and that is despite having last year in the comparative 10 to 15 million COVID-related revenues. Gavin talked about some of the challenges and costs, the logistics, the Vietnam issue. That had an impact on our gross margin, particularly in the second half. We believe that's temporary and eventually it will ease through. And that brought the margins down to 45.1% versus 47.2% last year. Adjusted operating profits are 45.1 million. That's 5% up on last year. And we had a few other items bringing down the earnings per share to 176.3 pence. The good news is cash performance, as I mentioned a bit earlier, has been strong. The conversion has been good, and our net debt at 24.6 million we believe was a good result for the year. As a result of that, the dividend proposed by our board is very pleasing and hopefully will be well received by our shareholders.
Gavin was dealing with some of the market sort of areas, so can you split some of it out into the different sectors and how they've performed?
Yes, so semi-fab, as mentioned, right up front has grown tremendously throughout the year, and the revenues were up 46% in constant currency and is now 39% of total revenue for XP Power. The industrial technology sector grew 3%, which had a sluggish start and then recovered through the year, and that makes up 38% of the revenues now. Healthcare is down 15% on constant currency, but not a surprise considering we had the 10 to 15 million of revenues last year.
Okay, Gavin, the thing we cannot escape, as you've just alluded to, is ESG, the sort of green movement, but also from memory, you as a company have been sort of ahead of the curve on that to a certain extent, but ESG is now becoming much more part of the commercial vocabulary. So where are you on that? Where are your clients on that? And can you actually exploit that as good marketplace?
Yeah, I mean, you're right. Sustainability has been part of XP's DNA for many, many years. We were one of the first power supply business to join the Responsible Business Alliance. Basically gives us credibility. We're audited, both of our sites are audited in Asia, and it gives our customers some assurance. And we've continued. We launched the green product range in 2012. That's grown, but it's not just the products we produce and making them as efficient, it's making how we make them as efficient as possible. So we have solar panels on multiple sites, we have low energy lighting, and it's showing that responsibility to our customers, and that's what they like. We're getting more and more requests to be higher efficient, so their customers benefit from a lower power usage, and people are starting to look at their CO2 emissions, both Scope 1, Scope 2 and Scope 3. We've mapped our Scope 1 and Scope 2, and in 2022 we'll do a full mapping of our Scope 3 emissions. And then as part of that, we've set an aspiration to have carbon neutrality by 2040. We're hoping to do a strategy that brings that much closer to today, because as we see how important it is. And the other factor that happened during the year, it was really pleasing that one of our key customers, ASM, awarded us their Prism Award for sustainability. It was their inaugural award, and they awarded it to us for our long-term focus on sustainability initiatives.
Excellent. Well, you mentioned 2040 there. I hope I'm still around to be reflecting. We're all still around there to be doing it. But before that, you've already talked, Oskar, about the sort of financial highlights. Just give us the quick sum up, the conclusion on what we've got to watch for in 2022 within the realms of what you can say within, stock market rules.
Of course. So it's that inflation challenge that the world is facing. Labour rates, material rates, the slow recovery post all this disruption that we've seen. How you manage that supply chain is going to be essential, and that has been the key differentiator, I believe, and it is one of our strengths. So that is the lookout, is make sure that you can deal with those challenging times.
Gavin, your final message. You are expanding. You're starting a new recruitment website. You're going to be doing a new investor website. There's quite a few changes, but that suggests you are pretty confident about 2022 and beyond.
I think we start 2022 with firm orders of 217 million, up from 125 million at the beginning of 2021. So there's huge growth, and we're investing behind that. So we also announced that we're investing in a third facility in Asia. It's likely to be in northwest Malaysia. We're looking at new design centres in the Philippines, and we're investing in capacity in all of our existing facilities. We expect good medium-term growth, and we're actually quite excited about the future.
Great, very exciting. And I could tell when we came in the office this morning, you're both really busy. So thanks for taking time out, and I'm going to let you get your noses back to the grindstone now, making more money and improving performance. Thank you very much both for joining us.